Welcome to G3 Investors. My name is Greg Gallagher, and we're going to look at how we trade in the new market that we're in. We've had a blow off top, and we've had a 34% correction here, and I believe we're in a bull trap, and we were in the denial phase. And I think we're transitioning to the fear phase here. So how do we trade when we're in a market like that? Well, we short. We use inverse ETFs to short the market. And because they're derivatives, they're used by the big players to offset their long positions and so on and so forth. And at the early stages of a bear market, we just day trade them. So I'm going to show you how we day trade them. But first, this is what an inverse ETF is, so you can stop this and read this to get some idea of what I'm talking about here. Okay, the easiest way is to just show you. So we use the 10-minute simple moving average. That's this red line that you see here, and I've got it open for 5 days here. So I'm going to show you a couple of days of how I set it. Obviously, I look at the previous day's trade in the futures for a given morning. So for this trading day here, we set the initially we set the let me see if here, get a highlighter here. We set it basically right there, right above that at 1050. So we said, hey, we'll enter at 1050 or 1060. I think it was, maybe it was 1060 as I recall. And so we set it right here. We look at this red line, use it as a guide, and I just happened to set it at 1060 because I wanted to be above all this. Then the first hour of trade comes out, and that's when the market makers are getting all their morning activity out of the way, so we don't do anything. So we wait until after the market opens for about an hour to 10 or 11 o'clock, and then we look at it. Well, you can see the red line continued down. So because that red line is going down, I want to see it level out like this right here. And so when it leveled out and it made this little W formation, I reset my entry point, my pivot point or my buy point to $10.40, which would be right above that right there. And of course, we're looking for the market to roll over. We've been looking for it to roll over for quite some time now, and it hasn't done it. But at 2 o'clock yesterday, and that would have been May 12th, the Treasury reported that the budget deficit for the month of April was a record $738 billion, the highest in history. And this market, bad news has been good news for this entire time of this bear market rally, as I like to call it. And that's when the market finally said, wait a minute, something's really wrong in Dodge here, and it rolled over. And so we got in at 1040, and then we sold at the end of the day, at the high of the day, because it rolled over. And why we don't hold over these is because we're just starting to get started. Now, as we get closer to the lows for the year, okay, when we get closer to that 34% low, this is going to get more and more fearful. So what happened today? Well, let's change this to a 2-day view from a 5-day view. Okay, now you can see better how it happened yesterday, where you can see, right here, it went below the red line, it flattened out, and I picked, 1040. You could have picked 1035. You could have picked 1050. It doesn't matter. When you get in, even if you got in at 1060, you still made money. And I sold. It wouldn't be necessary. If you wanted to hold it, that's up to you. I don't trade in the after hours, so I don't do that. So what did I do today? How did I set it up for today? Well, today is a different story. So again, I looked at the close from the prior day was 11. And so as it flattened out, I said, well, gee, I ought to be able to get in here at the close at 11. So I set my pivot point at 11. But again, I didn't get in the first hour. Okay, I did not get in until that bar right there, okay, at 11:10 a.m. So I bought my 600 or 1,000 shares or whatever I bought at that point in time. And now I'm in, and then I will use this red line here as a guide to the stop. But there's a little trick that I play, and that is I get rid of the extended hours now. Because I'm trading live, I only want to look at live. So right now, that my stop's set at 11:10. Okay? And I might change my mind depending on what happens, like I would like to look at the volume, and see what's happening. Well, the volume's slowing down here. So I use this as a guide. Obviously, I want to take profits. I don't want to lose money. I'm up on the position, so I'm going to do that. So, I might change my 11:10 to 11:20 or something like that as the day goes on. Or I might take profits if the market looks like it's going to go, when I start getting big moves down, okay, I'm going to take profits because I'm day trading. And then I'll use this line again as a guide to get in the afternoon. There's nothing wrong when you're day trading, okay, and I don't like to do this often. I don't have time for it in my busy schedule, but when I'm doing it, day trading, I might take profits in the morning and wait for it to come back down below this line and get in again, maybe at 11:20 or 11:10, because this is going to flatten out sometime today. Okay, maybe it's going to flatten out at 11:10. Maybe it's going to flatten out at 11:20. I don't know. But that's my guide right there. And if you don't have time to do that, you can calculate the average true range for this trading day at some point in time. Now, I would have done that first thing in the morning, the first hour, and that average true range would have been the difference between the high of the day here and the low of the day here divided by 2. And I don't know who came up with that method. I don't care. I learned it from somebody else. I cheated. That's part of trading. You learn what you can learn, and there you go. But that's it. It's not a complicated process, but it does take some finesse. And like I say, when the market is heading towards what I want to call the fear or the anxiety level, okay, when you're going down, you're going back down towards that low, that first low we made in this bear market. Now, the rest of the market thinks that we're off to the races, and this is a new bull market, and it's a new era, and we're going to be great come the third and fourth quarter. I think that's all bullshit, but that's just me. I might be wrong. If the market proves me wrong, then I'll go long. But this is how we short trade at G3 Investors. I do want to do a little bit of promotion here. This is what we've done for the year. We're up 42%. We've gained so far this month 2.7%. I haven't updated what the Dow and the S&P 500 and the NASDAQ have done, but we will be beating them handily. If you're really interested in learning how to trade, you can become a G3 patron, get early access to videos, the setups that I see daily, comments, updates on the market throughout the day. And we have a weekly Zoom Q&A session. All you got to do is copy this link right here into your browser, and you can become a patron. $5 gets you a tier 1 patron who gets a weekly video and a weekly results. The tier 2 patron gets all the stuff mentioned above. Okay, that's it for me. This is Greg Gallagher with G3 Investors, wishing you good trading and good luck. Oh, also subscribe if you like this YouTube video. Become a subscriber. Thank you very much.